Since Rocket Lab is already a red-hot stock on the regular, let's go over some recent launch activity and then look at more reasons it could be getting more than one boost in the not-too-distant future. To begin, it recently launched its 65th Electron rocket to deploy Earth imaging satellites for Black Sky, a real-time space-based intelligence company, showcasing its capabilities in providing frequent, reliable, and dedicated small orbital launches for satellite operators. In addition to the Black Sky mission, Rocket Lab launched its third mission for the Institute for Kyushu Pioneers of Space Incorporated IQPS, a Japanese customer, in May. And in March, it deployed 8 satellites for Aurora Tech, a Germany-based global wildfire and detection company. These missions demonstrate Rocket Lab's increased launch cadence and efficiency. Rocket Lab's next mission, the Mountain God Guards, is scheduled for June 11th, launching a synthetic aperture radar Earth observation satellite for IQPS. The company has a busy launch schedule ahead, with multiple missions planned for the coming months, including launches for Hawkeye 360, hypersonics, and the U.S. Space Force's Space Systems Command. Rocket Lab's Electron launch vehicle has become the second most frequently launched U.S. rocket annually and has delivered over 200 satellites to orbit for private and public sector organizations. Some believe Rocket Lab's Electron could become the most frequently launched U.S. rocket after Musk criticized Trump's proposed tax legislation, prompting Trump to suggest cutting Musk's government contracts. Musk responded by hinting he might decommission SpaceX's Dragon spacecraft, which ferries astronauts to the International Space Station, before later retracting the comment. Musk's subsequent post, "We have got the spaceships and they do not," implied U.S. reliance on SpaceX, fueling interest in rival aerospace firms. Incidentally, Rocket Lab holds multiple NASA contracts and is a contender for Trump's $175 billion Golden Dome missile defense initiative. During the company's recent Q1 results, market revenue expectations were exceeded, with sales up 32.1% year-over-year to $122.6 million. However, the company's next quarter revenue guidance of $135 million was slightly below analyst estimates. The company's strong performance was driven by growth in its core launch and space systems businesses, as well as its strategy of vertical integration. CEO Peter Beck highlighted the significance of securing new Electron and HASTE missions and the successful execution of 5 launches, demonstrating trusted and reliable access to space for small satellite operators. Rocket Lab's space systems segment led growth, with improvements in gross margin attributed to better scale and product mix. Rocket Lab's guidance is underpinned by anticipated momentum in the Neutron launch program, margin expansion, and contributions from new product lines and acquisitions. The company expects higher launch cadence and average selling prices in the second half of the year to drive margin improvement. Management cautioned that negative free cash flow is likely to remain elevated until Neutron's first launch, after which they anticipate improvements in cash dynamics. Key drivers of future performance include Neutron's launch readiness, margin expansion from improved launch mix, and strategic initiatives in product development and international expansion. The company's efforts to expand its portfolio, such as modular solar arrays and advanced satellite radios, aim to capture new business in government and commercial markets. Similarly, Rocket Lab's planned acquisition of Mineric, a German laser communication terminal provider, is expected to strengthen its product suite and enable access to European government and commercial contracts. The company is establishing a European presence to pursue sovereign government programs and broaden its addressable market. In keeping with this strategy of broadening offerings, Rocket Lab is set to acquire Geost, a specialist in electro-optical and infrared payloads for national security satellites, for $275 million in a combination of cash and Rocket Lab shares, with an additional $50 million in potential earnout payments. This acquisition marks Rocket Lab's entry into the satellite payload segment, reinforcing its position as a full-spectrum provider of space solutions for national security missions. Geost delivers advanced EO/IR sensor systems for missile warning and tracking, tactical intelligence, surveillance and reconnaissance, Earth observation, and space domain awareness. These capabilities align with the U.S. Department of Defense's goals for resilient, proliferated space architectures, such as the proposed Golden Dome architecture and the Space Development Agency's tracking layer. The acquisition will enable Rocket Lab to build complete spy satellites, combining Geost's payload capabilities with its existing satellite bus technology. This move positions Rocket Lab as a prime contractor for government satellite programs, potentially boosting its competitiveness for future defense contracts. Rocket Lab's CEO, Peter Beck, stated that the acquisition will allow the company to deliver complete, mission-critical space solutions, enhancing its role as a trusted provider of end-to-end space capabilities for the United States and its allies. The deal is expected to close in the second half of 2025 and will bring GEO's 115 employees to Rocket Lab's global workforce. This move could help Rocket Lab secure contracts under the Golden Dome plan for a space-based missile defense shield. With this acquisition, Rocket Lab aims to streamline spacecraft production, reduce integration risks, and accelerate timelines, ultimately strengthening its position in the national security space market. For more on stocks and crypto, follow Ascencore. Thanks for watching, and have a nice day.